So the recent tech high growth stock sell-off has presented us with amazing opportunities in high growth companies, which I personally absolutely love investing in. So what I did was I took the time this weekend to actually comb through my watch list for businesses that I've been following for a while but never really took a huge deep dive into, and I don't own any of these stocks we're going to talk about today. But these are all great companies that I think are presenting us some good opportunities right now. And like I said, right now I don't own these, but I may buy these ASAP. And if you want to know exactly when I buy, if I buy, I will be disclosing that in my VIP group. Link in the description down below. I'll be posting it in the Discord and all that stuff in there. So guys, drop a like on this video, subscribe and hit the bell notification if you're brand new here. And let's kick off this list here with CrowdStrike, ticker symbol CRWD. And this is a cybersecurity play. And it's really a booming industry and a booming company going forward. 2020 really accelerated the adoption and importance for this type of business, and I think that this is just the beginning for this company. It's a very strong growth stock with a strong future ahead of it. It has positive free cash flow and it has absolutely no debt as well. The issue that I found with this is that it is a bit expensive right now, even after the sell-off. It's at like a 36 or so price to sales, which is steep for me personally. However, I will be doing a lot more research into this company because I do want more exposure into like the cybersecurity play. And maybe it makes sense to pay a hefty premium for this company because it's going to grow into one of the largest players in this space over this next decade. Datadog is our next company, ticker DDOG, and this is a big player in the data analytics space. Now, I own Splunk, which is a competitor, and Datadog is a bit different here because they're a cloud-first player, which makes it much more appealing to investors. But because of this, because Datadog is seen as a cloud-based company, they're a lot more expensive right now compared to its peers. They're trading at like a 23 price to sales. That being said though, they do have strong fundamentals. They have good growth so far and they expect to see good growth continue. They have positive free cash flow and their balance sheet is absolutely stellar with a 2x assets to liabilities ratio. Datadog is going to be around for a very long time. It's in a growing sector here for big data analytics. And because I own one of its biggest competitors, Splunk, it is definitely one that has my attention here because I understand the value of it. Next up is Teledoc, ticker symbol TDOC. And this is a telehealth play that I really like. It's actually one of the main players in this space. They also have very strong growth and it's going to continue for the foreseeable future. They have positive free cash flow and they have a reasonable price of sales of around an 8. But with Teledoc, there are some negatives here that have me questioning whether I really do want to buy this stock. They have a good amount of debt on their balance sheet and they have high goodwill, which is an intangible asset that I don't think is really all that valuable. This could put them at risk of more dilution and thus more selling pressure, and as a potential investor, doesn't really have me all that excited. However, it will still remain on my watch list and I will still keep doing more research on this company. Number 4 is Adobe, ticker symbol ADBE, and this is the gold standard business for SaaS because they've transitioned from, the one-time pay up front kind of model to a recurring SaaS model and they are thriving. When a lot of companies look to shift from the one-time payment to a recurring model, they look at Adobe and how Adobe did that and they try to mimic that. And that's kind of what Splunk is doing right now, and a lot of other companies as well. Adobe has a very strong moat, a very strong brand, tons of products that are used daily by professionals and individuals, and I think this is going to continue for a very long time. They have strong growth with the business and that's going to continue for the foreseeable future. They have free cash flow, which is positive and growing, and their valuation is fairly reasonable at a 13 price to sales. So this one is higher up on my list for a stock that I may buy very soon. Moving on, number 5 is Autodesk, ticker symbol ADSK, and they're a great CAD design software tool which is used by many industries like architects, for example. It's kind of an under the radar software company, but they have been growing quite well for a very long time. The companies continue to expect strong growth with strong positive free cash flow. And while their price to sales is a bit expensive at around a 14, it's not too bad for a business like this that just keeps growing with a SaaS model that I really do like. However, similar to a couple other companies here, they have very high goodwill, which I see as a liability, kind of a red flag here. However, if their business just keeps continue chugging along like it has been so far, this won't really be as big of an issue, say 3 to 5 years out. Veeva, ticker symbol VEEV, is our next company here, and it's another healthcare play with a focus on tech. So they use cloud computing to help with pharmaceuticals, and they have strong partnerships with giants like Johnson & Johnson. Growth is very good for this company. Free cash flow is positive. They have a strong balance sheet with no debt on there. But like the others, they are still trading at a premium at a 24 price to sales. Now, this may be justified because this is a player that is kind of in a very unique situation with a very unique product, and they have strong relationships. So they do definitely command a premium. They are doing quite well here as a business, and 2020 was just a golden year for them to shine. However, like the others, there's a lot more research that needs to be done here to see if a 24 price sales can actually be justified. Number 7, Spotify, ticker symbol SPOT. And I'll be honest, this is one of the most exciting ones on this list for me. They're kind of the audio and podcast giant, and this is something that I think will continue dominating going forward. Previously, I was very skeptical on Spotify. They're competing with Apple, with Google, with Amazon. They have massive competitors. But what they've done time and time again is just proven that they will keep growing regardless, and they will be the go-to platform when it comes to music and podcasts. Spotify has seen very strong growth and will continue to see very strong growth. They have positive free cash flow. They have no debt on their balance sheet. And you know what? Their valuation is not that bad. Price to sales of around a 5, which has me questioning, why is the stock so cheap? Maybe I need to buy this ASAP. Anyways, I'm digging deeper into this as we speak here, and this one may be added to my portfolio fairly soon. Number 8, guys, is Elastic, ticker symbol ESTC. It's another big data analytics play competing with Splunk and Datadog in a sense. It's a smaller company than the other two. They're more focused on like the open source side of things, and their valuation kind of sits in between Splunk and Datadog. Another company here that has very strong growth and something that they will continue to see for the foreseeable future. They have positive free cash flow, which is a strong sign for future profits. They have no debt on their balance sheet, and their price to sales is kind of right in between Splunk and Datadog at around a 16. Not too expensive, not too cheap either, but for a company with no debt, strong growth, yeah, it's one that definitely has my attention. Okay, so now number 9 is one that I've been asked about in the past, never really got a chance to make a video on this. And this is ServiceNow, ticker symbol NOW. And it's a software company that arguably has one of the best business models out there. So this is a software SaaS type company, and what they do is they develop a cloud computing platform to help businesses manage digital workflows for enterprise operations. So this is definitely a company that's focused more on the enterprise side of things, not really consumer facing. However, I like these kind of stocks right now because a lot of them have sold off quite a bit. This business has very strong growth, and the company has been seeing this for quite a while now, and it's expected to continue for the foreseeable future with positive free cash flow as well. They have a strong balance sheet with almost 1.5 times assets to liabilities, and their price to sales is a little high, but still not too bad at around a 16. Remember, this is one of those premium businesses, so they do command a premium valuation. So even at a 16, it may actually be justified here if you're willing to hold this stock for, say, 3 to 5 years or so. So I want to really reiterate here that all 9 of these stocks are not ones that I own today. However, I am looking into them as we speak. I am doing more research on them. They are all interesting businesses to me. And I would like to have them in my portfolio at some point in the future when I can justify their valuations. Some of them are very close to that right now, some of them are at that point, but some of them still have a little bit of ways to go for me to be like, okay, I think the valuation makes sense, I'm gonna buy in right now. What I do like though with all these stocks is that they all pulled back because of the broader market sell-off. There's no fundamental issues really with any of these businesses. They're all doing extremely well. They're all expected to continue doing extremely well. And if you are someone that kind of loves these high growth companies, this is probably the time to start looking into them when the market's saying high growth companies are not something we want. We want the traditional blue chip value stocks. As an individual stock picker, you want to buy these stocks when they're out of favor, because over the long term, they will eventually come back into favor and they will do extremely well for you. Anyways, guys, hope this video was of value to you. And if it was, hit the like button down below. Let me know which one of these 9 stocks is your favorite, which ones you're planning to buy sometime soon. And let me know if this video actually gave you some ideas on what stocks you should research more into to possibly add into your portfolio. Anyways, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.